Hey, morning. I'm not really sure if you want to watch my stream. I don't really have a direction again today. I took a trade in the morning, realized that it wasn't that great of an entry. I just let myself getting stopped out. So this was my initial entry in NQ. So yeah, if I would have kept to the entry, I would be entering over here and then getting just tap out and stop out over here. So after I saw this candle move down, I just moved my stop to break even and I got stopped out over there. So now I move the chart to ES because instead of a bearish view, I actually have a bit of a more bullish view on ES, but it's also not that strong. I'm actually just probably looking at if I would have entered, I would have set an entry around here, and I would expect price to come down here and go up. But the fact is that it hasn't really went down so much down here, so I'm still just looking. Hey, morning Maverick. But realistically, the short and the long are actually just 50-50 today. It's not really a strong view, as I think like the price range is currently in a balance. Like, no one really has a direction in the morning. That's why you see like they're both just ping pong around. Hey, currently this one is my funded futures, but my main account is usually in Bullinox. I'm just using my funded futures right now because I'm linking it to TradingView, and the current promotion is quite cheap. Why are you considering earn to trade? I mean, like, earn to trade is okay. It's not really the best in terms of what I'm looking at. I mean, like, what do you prioritize in terms of the features that the accounts provide? Are you concerned about like when are they paying out or what? For Bullinox, it's a one-time activation fee, and the fee can be more expensive at the higher level account. So I tend to prefer the Bullinox 50K because for that one, the one-time activation fee is $148. Yeah, but earn to trade also has a one-time activation fee. I think theirs is 139, but the 139 is for all accounts. For Bullinox, it's, let me see, 143 for 25K, 148 for 50K, 248 for 100K, 498 for 150K, 898 for 250K. So it depends on the size of the accounts that you want. For me, I would not go for the more expensive account at Bullinox, just because I also don't think the higher activation fee is worth it. I mean, it's just trading futures. I tend to look at prop firm only as a way to leverage and to limit the losses. Like, let's say if I fail this account, I am losing the amount I pay for the prop firm account only. But then if I make money and if I'm earning, then I'm getting 100%, because like Bullinox, they are saying that, okay, they are giving you the first 10K for free, 100% for free. How I see it is, I am trading the futures account. If I can make money like based on it, then yeah, I'm getting the money. But then if I lost, I'm just losing the fee I'm paying for the prop firm account. It's actually, I mean, it's better than losing my own actual money, because initially I trade my own capital in the past, and I lost a lot of money because I don't know what I'm doing at that time. So that experience was very painful. And if anyone is starting out like trading futures, I would recommend them to actually go and trade with a prop firm first, because I mean, like, most of the time I can guarantee that if you're a beginner, you are most likely going to be losing money first instead of making money. And if you are going to lose, it's better to be losing on like a Steam account instead of your actual money. But if like once you traded for a while, you have enough like screen time or experience, you're saying that, okay, I think that I'm good enough in trading. I can I'm a profitable trader, and I want to trade my own capital, then sure, just go ahead. I mean, like, that's what I'm also trying to do right now. I'm also trying to go full-time with prop firm, with the futures trading, so that I also can quit my job. It also depends on how much, because like, let's say if like right now I am, because like basically my strategy is I'm a bit greedy, so it's actually not that suitable for, let's say, day trading. If I'm gonna win, I'm gonna win a lot at once. But if I'm gonna lose, I'll be losing a little. Yeah, but I think like ICT mentioned in the past, like if you are just starting out, you want a good strategy, like you can trade one ES contract and just like get 5 points every day. Like 5 points, that is maybe $100. Wait, how? 1 point is $50. 5 points is $250, I think. Yeah, so every day $250. I mean, like basically, I would actually recommend that you get a good strategy for yourself first. Then I backtest the strategy. If it's viable, then you can just start with one account and don't actually just go crazy on the eval, because prop firm is like just a leverage to make a larger amount with less money. Because basically how prop firm works is actually like an insurance. A lot of the people who go into prop firm, they will fail their challenges. They are basically giving the prop firms their fee for free, and the prop firms are using the losers' money to pay out for the winners. So basically what you have to do is you need to make sure you are in the winners bracket. And how you are going to go into the winners bracket is you have to make sure you have a good enough strategy. If you have a profitable strategy, it actually doesn't matter whether you are trading prop firm or your own capital, because your net expected value is positive. So as long as you continue on trading with that strategy, you keep on getting money. For me, I am actually using a variant of ICT in my strategy. So so I traded quite a long time already. I actually paid for a lot of different courses. I learned a lot of different strategy. So I mean, like, ICT is just one one of the more popular strategy. You also have like volume profile and scalping. So it actually depends on your personality. Do you want to get in and get out quickly? Then if you are just like few minutes trader, then I will actually recommend scalping for you. So I just like preset for a few points, you're in, then you're out, and that's the whole day for you. But for, let's say, for something like ICT or Wyckoff, the expectation is that you are able to hold the trade for a longer period of time. So if, like, let's say you're trading ICT, for maybe the 1 minute, you can need to be able to hold it for up to an hour. Like, let's say I am trading on the 5-minute charts here. Sometimes I am just holding my trade for the whole day. So it depends on your personality, how long are you able to trade, or do you need to monitor it all the time? For me, actually, I found that scalping is more profitable, because with scalping you are in and out a lot of times. As long as you have like a 1-to-1 risk reward and your win rate is more than 50%, then you're essentially winning. But with the reason I prefer ICT is actually I prefer more of a hands-off. Like, so I set my entry, stop loss, and take profit, and then I will just let the price reach the area and let everything go by itself. So I will just take like 1 trade a day. If it's a failure, then I just let it be. So for, let's say for ICT, my entry is just like, I'll trade less, and my win rate is roughly about the same, but I will have a higher risk reward ratio. Actually, I don't rely on anything. I just look at the 5-minute charts and that's it. So the DOM, footprint, the bookmap, actually I tried all those in the past. Bookmap for me is too busy. Footprint charts, I actually tried it in the past. It's actually quite useful if you have like an automated software, because I paid for a lot like for those automated scalping program in the past, and I just cannot be profitable with it. But I can see how if, like, let's say I'm combining footprint with ICT, like let's say this is a single print, and you can see that there's not really much of any trades in this area, so you can put that out. This is my entry, and yeah, so it's actually quite useful, but I don't really find value in paying for expensive software because I can be profitable without relying on it. As for the DOMs, I found that DOMs is more helpful if you are a strictly volume profile trader. For me, I'm not a volume profile trader, so I don't really use DOM that much. Yeah, I mean, for me, actually, I paid for all the software in the past, but in the end, I just decided that going with the cheapest option is the best for me, because, like, let's say, even if I'm relying on all the software, it actually doesn't really help my profitability that much. I'm just paying for the software vendors for the software. I mean, it's up to you. It's like, it depends on your personality. Yeah, sometimes. But the thing is that a lot of the software that you are saying, you can also get it for free. How do I put this? I mean, like if you got like, let's say, depending on the platform you're using, like let's say, if you're using Quant Tower is free. They also have good volume profile. I think they also have like DOM attached as well in their free software. Whereas for NinjaTrader, you need to pay for it. But even so, like both of the software are offered. You can use both of these software for free with the futures prop firm. I mean, like bookmap is okay, but I just feel that like bookmap is quite busy. If you look at some of the YouTube videos, like how they are trading, you just have a view of it like on the screen, like whether you are used to it or not. For the success rate, it actually also depends. Like, let's say, then do you think is it worth it? Like, if I have a 50% win rate, but I have a 7 risk to reward ratio, or I have a 90% win rate, but my RR is 1-1 only. So if like this one, then this actually depends on your personality, because like let's say the software can increase the win rate, but the expected risk reward for that they offer is 1-1. Then maybe you might be better off going with the lower win rate but higher risk reward. No, I'm not American. I'm from Asia. No, I'm currently staying in Asia. I did spend a few years in US in the past though. Let's say when you're trading Forex, what sort of strategy are you using with the Forex? Because if you are successful with Forex just by looking at the chart, I don't find that there's any issue if you are using the same methodology and applying it to the futures chart. Because like, let's say if you are trading currency, you can also actually trade currency futures. Like let's say I'll use currency, Forex. No, this use. So for futures, you have 6E. So 6E is I don't have the data for that. Yeah, so 6E is, I think, Euro USD. So if you want, you can also just trade Forex futures. Then you can also continue on trading Forex, but it's only on the futures platform. But the futures for Forex are all USD related. So it's like GBP USD, Euro USD, Yen USD. The reason when trading futures, why most people are looking at S&P 500, ES or Nasdaq is because those are the most liquid and largest traded equity around. And actually, like those who move from Forex to, let's say, the index futures, they found that the movement in index futures are actually cleaner. And it's like that's the comment I heard from others in the past. Yeah, so actually basically turtle soup is just a liquidity grab. For me, I don't really like turtle soup that much because like let's say here you can actually call this a turtle soup. Like let's say here, these are all the overnight liquidity build up. So assuming a lot of stop orders over here. And then at this spike on top, you can actually, like let's say, when it break on above, you can short from here. So this is your turtle soup entry. And then you just let it go. And then, yeah, but I don't really like the turtle soup entry is because how are you going to define like where is your stop loss? And it's also, let's see, the turtle soup is like, let's say, a bit of like a higher array, PD array resistance. So even though if you are looking at, let's say, for all these, like all these numbers, I mean, if you are looking at the chart, at a 5-minute chart, you see that there is not really a left-hand side chart for all this. But if you go to, let's say, the daily, you can see that this is actually a higher level resistance for NQ. But yeah, that's why like the turtle soup is basically just entry at a higher level resistance. But because usually, like let's say the higher time frame resistance is actually quite large, like how are you going to define like when are you gonna enter for the turtle soup entry? Is it here? Like where are you gonna enter the stop loss? Is it middle of the higher time frame? For me, I tend to find turtle soup entry have too big of a stop loss. That's why I don't really like to enter on that. Yes, I mean, it is in a sense, it's a false breakout, but it's a false breakout to a higher time frame, like imbalance. So how should I show this? Like, let's say, oh, I don't really have that much. Yeah, because I don't really have that much chart loaded for the index. I only show like the last 2 days. But if you are looking at this is actually a higher time frame resistance. If you are looking at, let's say, the 4-hour time frame, and that's why like the first entry over here is a turtle. You can say that it's a turtle soup. You might look at it as a false breakout from the lower time frame. Like this is just the last few days candles is just a spike up. But if you are looking at on a daily basis, this is actually a higher time frame resistance. That's why you are saying that it's a false breakout, but actually it is a push into a higher time frame resistance. That's why there is like 2 attempts here, and both of them usually fail. So most of the time when people say that it's a turtle soup, I just look at it and say, yeah, it's an attempt into a higher time frame resistance. Yeah, like for today, actually, I don't really have any trade ideas for the current AM session anymore. Mostly because we are looking at all this chop right now. It is alternating between this high and lows. Also because like market does not really have a direction right now. We have FOMC on this Wednesday, and the market is consolidating for a large breakout during that period. I wanted a bit of a trend day before the consolidation on Wednesday. But yeah, seems like we're not getting it today. I also do not have any good market confirmation on entering any trades. More than 10 years actually. So actually, like you, I started out with let's say stocks, then warrants, then I moved to CFD like maybe 8 years ago, I think. So I also traded Forex in the past. But after I moved to futures, I actually prefer futures. Because like let's say with Forex, I found that Forex market is quite manipulated in the past because there is like a few brokers and the charts are not uniform in the price. But with futures, the price all goes through one exchange. So no matter which platform or which brokers your orders go through, you need to be looking at the same. You're going to be looking at the same price no matter where you go. So I like the uniform approach for that. Yeah, so like maybe Forex 8 years ago, then futures, I think 3-4 years ago. Yeah, I mean like there is experience, but don't have the profit. Yeah, I mean like basically I traded a lot. Like when I first started out, because I'm in the Asia time zone, I used to trade in the Hong Kong market, and after that I moved on to Forex because the Forex, the time zone, you can go around. And then now I'm in the US futures because I can trade the US market after I'm working, after my working hours. Gold, I do look at it in the past, but I do not really trade gold because for me, I don't really understand gold, and the price movement for gold is not as good as index futures. I mean, I basically I do look at gold a bit in the past, but if you are looking at expansion, like let's say for gold, there is a displacement. Like let's say, usually gold movement is only until like this. But for index futures, I can expect the movement to be like this. That's why I prefer index futures over gold, because the movement for index futures is larger compared to gold. At least like that was my experience in the past. So that's why like gold is some of the market that I look at in the past, but I don't really trade them now. But it also depends on your strategy. I mean, like if you are good at trading gold, just go for it. After all that matters is that you are making money from it. Like let's say if you want to trade gold, yeah, I think it is GC. GC is gold futures. I don't have. Yeah, I don't have gold futures data. Basically, you can also trade gold futures on the futures prop firm. Yeah, I can try, but the thing is that with making videos, I don't really have that much time to do video because I am basically working and just doing the YouTube at the side. So YouTube, I usually have only the weekends to do the video, and if I'm adding subtitles, sometimes it takes more time. It actually depends on whether I have the time or not to add the subtitle. I mean, like the videos on my channel are not really that much. I just record a video on whatever I could think of for that particular week. So they don't really have much of a theme or anything. As for the COT report, I don't really use them because COT is usually for longer term traders, but I don't trade for the long period. Yeah, I mean, like the COT report, for sentimental analysis, it actually doesn't really matter for me because I am more of a technical trader. So even if, like, let's say the sentiment is bullish, if I see that the price action is a bearish sign, I'll just take the short. I don't really care whether the sentiment is bullish or bearish, as long as the chart is telling me, okay, it is a good pattern to short, it is a good sign to long, then I'll just take that. For the, let's say for the COT, it actually sometimes is good to look at how are the bigger player, whether they are positioning themselves for a large rally or a large short. Then that is helpful because you can know that, like, the banks or the central bankers, they are holding a large short position or a large long position. If they are doing that, then you can expect for a very large trend movement in the index as well. But if I'm just looking at the chart, I can also enter the trend based on the trend. So I don't really look at the COT trades, the COT report. But if you find the COT report like helpful for your trading, then just go ahead, use it. Al Brooks. Actually, I never really trade using like Al Brooks pattern before. Like Al Brooks, let's see. Yeah, I never use go through Albrook's course. But to be honest, ICT is not really a good trader. If you are looking at his historical performance, I don't think he's really winning that much, even though he is claiming that he won a lot of trades or is very profitable also. I mean, his ideas are good and he's offering them for free, which is good. But in terms of actual performance, I don't know whether he's really that good. Because like let's say, like right now ICT is supposed to be joining the Robbins Cup, and I don't see him in the leaders, like the leadership board, because they will show you like who is the most profitable traders currently in the championship, and I didn't see his name over there. Instead, you can also use like idea like from someone, like let's say I'll type it here. You can search for it for his YouTube channel. I think his idea is also very good. Like he used to be one of the lead programmers, I think, for the trading firms, and he is popularizing the idea of using initial balance. I mean, like he's also like ICT, he's repurposing the concept of initial balance for his idea of IDR, ADR, all those. But like the concept is, let's say, on the 5-minute charts, the 5-minute close is a good indication of whether it will be the low of the day or not. Like let's say for this is the initial balance high, there is no close above this, there is no candle close above this level. So it shows that the probability is higher that price is looking to go downwards for the day. And this is like the 5-minute candle close for initial balance. You see that there is a candle closure below the 5-minute, below this IDR over here. It shows that the programming, the computer programming that controls all this, they are planning to go down on the rest of the day. Like that's the idea. He said that in his programming there has 70%, I think it's like an 89% win rate or something like that. So that is also like one of the ideas you can apply. But I mean, like whether you're using ICT or Albrook's, it also depends on you. You just backtest the strategy on your own data. You need to determine it yourself whether you want to, which one do you think is better. But actually for me, today I see that it's actually quite bullish.